From Stuck to Scale, Growth Strategies for Small and Mid-Sized Businesses, your guide to navigating growth, transformation, and success in today's ever-changing business landscape. Each week, we'll dive into proven strategies, real-world case studies, and actionable insights designed to help small and mid-sized business owners scale smart, lead stronger, and grow faster. Let's get you unstuck and on the path to sustainable, scalable success. Now your host, Julio Gonzalez.
Welcome back to From Stuck to Scale. Today we're diving into a conversation that challenges the conventional views of accounting in your business. We're shifting the narrative from merely recording the past to strategically planning for the future. Rhett specializes in transforming the way businesses view and manage their accounting, moving it beyond mere insights to a powerful tool for strategic decision-making. With the mission of helping people build strong businesses, he supports software and service companies with revenues between $1 million and $20 million in improving cash flow for clarity in financial performance. Rhett is the creator of The Profit Approach, a groundbreaking framework that empowers business owners to leverage accounting as a performance driver rather than just a reporting function. With his insights featured on major platforms like Intuit and Xero, and as a recognized top 40 under 40 in the accounting industry, Rhett brings a wealth of knowledge and actionable strategies to the table. Get ready to challenge your perceptions of accounting and discover how it can play a pivotal role in your business growth. Let's welcome Rhett to the show. Welcome to From Stuck to Scale, Rhett.
Hello, thank you, Julio.
Tell our listeners a little bit about yourself and your business.
About myself, CPA. We used to be an auditor at a CPA firm, worked in software for quite a while, and we decided to start our company to help small businesses grow through use of accounting. So rather than being an auditor where you're out there looking for mistakes, we're accountants that help our customers actually succeed, so they look forward to working with us as much as they can, since it is accounting.
So I recently had another CPA on the podcast. How do you differentiate your services from other CPAs, other financial professionals that someone should call you?
Yeah, it's interesting. In the world of accounting, there's common roles. So a lot of people think they need a bookkeeper or I need a fractional CFO. Those are the two roles that they know, and those are really the two extremes of the entire world of accounting. A bookkeeper might be just doing basic things just to give you financials for a tax return, so it's not adding any value. You're not reading those things. And then a CFO is typically a finance person, not necessarily an accountant, and they're super expensive. And most small businesses don't need that kind of horsepower. They're not doing those types of complex transactions. So what they really need is what's in between. Accountant, accounting manager, controller, those are the types of roles in a corporation. In a corporation, there isn't a bookkeeper role. It's normally a staff accountant or a clerk. And so for us, though, we do that middle ground. We're really a fractional accounting department for growing businesses, getting from that 1 million to 20. They don't have enough work to keep one full-time person busy. They can get into some complex things, but basic things. So you don't want to overpay and have somebody do bookkeeping and have a bookkeeper try to do what a controller may be doing. So that's one difference. It's a fractional team of 4. It's scalable. You got a full kind of out-of-the-box accounting department. And we also try to be very tactical. So not look at accounting as a historical tool, but okay, now what do you do next? And that's really what we look at. We're trying to transform that in the mindset of our customers, from transforming it from what happened to what matters next. Like, we can use this information to improve your business. What's the first thing we should work on? And I think that's a little bit different than the common stereotypical accountant.
So I would argue all businesses, but definitely in small businesses, cash flow and revenue is very stressful.
Yeah.
How do you help your customers in not stressing as much? Sometimes they're even growing and they're still stressing. So how do you address that whole psychology of finance in a small business?
Yeah, that's the thing with the business owners. You get hit with stresses from all angles. One of them is cash flow, and it's also staffing and other things, churn, etc. But on the finance side, yeah, it's usually starting out bootstrap. You can kind of wing it. You know what's going on. At some point in the growth, what the business owner thinks is happening is not translating to the bank account, and they don't know why. And the financial statements can help that. But if it's cash basis accounting, if it's not accurate accounting, or it's not real time, it's difficult for them to understand that. They'll typically look at the income statement, looks great, but the balance sheet's not performing. And that's really where accounting kind of comes into play in translating the difference in how those two statements relate to each other. One tool that we use, and it's one of our many tactics, is a 13-week cash forecast. And I think that's a great tool to use for a business owner because you really visualize week by week what you think is going to happen to your cash. And so your accountant would prepare that, all the expected expenditures that are coming up. Payroll is going to hit here. You've got an annual insurance premium you're going to pay here. Let's talk about your revenue. When are these deposits going to hit on these invoices or however you're invoicing? And so I think that helps people. Like, I'm a visual person, so and I'm okay with numbers, but some people are allergic to hearing numbers. Right? It just like goes in one ear out the other. So just seeing it in a spreadsheet week by week just says, okay, I can actually see what's I think is going to happen in the future, and that I think gives a lot of peace of mind. You have like a plan, you can see it, and you're talking to somebody about it regularly.
How are your Excel skills?
Pretty good. We're in Google Sheets now, so it's still a little awkward after 15 years, but yeah, we're in Excel quite a bit. But now with AI and all those things, it really lets you unleash things a lot more than just whatever skills you had. Because now if you don't have it, you just ask it. I don't know how to do this, so just do it for me. So yeah, it's changing things.
I'm going to age myself here, date myself, I guess. I used to teach Lotus 1-2-3 for DOS.
Yep.
Back in the early 90s.
I'm in the age range with you there, Julio. Yeah. Yeah, when I started the CPA firm, they were just starting to use Word versus WordPerfect for DOS.
I used to teach WordPerfect.
Yeah. Lotus 1-2-3. Yeah. So do you still do the at before a formula and not an equal sign? I think that was Lotus, right?
I don't remember that part. Yeah,
I thought they started a formula differently, but I'd never used Lotus.
I worked for Carnival Cruise Lines for several years, and my first year was PC trainer, because PCs were really just starting to get big in corporations. So I taught. I had thousands of employees coming through my classes every week. So much so that finance would borrow me for 2 weeks a year to do budget and other stuff.
Nice.
So yeah, I'm a big Excel geek. But I also do talk to ChatGPT and Claude about how to do formulas, because that always comes in handy.
It's just so fast now. Yeah, before you're Googling it and looking at all these forums, and now it just tells you exactly, just does it for you.
Yeah. So you talked a little bit about bookkeeping versus, I'll say, accounting and finance. At what point in the life cycle of a business? Because one of the things I always talk about is there's different functionality, let's call it, at different stages of the business. So at what point does a business need to really formalize things a little bit more than just managing a checkbook?
Yeah, and your previous guest mentioned, I think, something around 500K in revenue type business, where you start looking at margins a bit more, and so that's kind of where you start, like making sure whatever you're selling is profitable enough to fund the operations, because then if you keep growing it, as he said as well, you'll grow yourself out of business. And so that's kind of one of the first sort of learning curves that a business owner hopefully will get into, is that gross margin on the income statement. What does that mean? What are the drivers of that? What should you be doing to maintain that? What's a healthy number? So starting there, and that's still good to do, even if it's just by yourself, or maybe you have a couple contractors. What we typically see is somewhere around 2 or 3 million on revenue, and this number could change depending on whatever industry you're in.
Sure.
Some creative agencies, they could have $1 million invoice and still be 3 people. And then e-commerce, it's very low profit, volume based, so they could have a lot of activity to get to 3 million. But somewhere in that range, it's starting to break. Like, you have too many people, you've got too many things going on. That read that you had of your business is no longer working. Like, mentioned the disconnect with cash, but it could be other things as well. Maybe if you're a service-based business, you're not getting invoices out fast enough, so now cash flow is starting to lag a bit from your hiring, and so that's a pain where it's not really like the P&L is telling you something; it's more just lagging cash timing. So I think that range typically is where it's like, I need to level up. Bookkeeping can kind of get you to a million or whatever range. But when you feel like that's not enough, like if I'm wherever you're finding the bookkeeper, and I'm stereotyping a lot, so there's exceptions to all
Sure.
these roles. But usually I'm hearing like, I'm tapping out. I know that I need more. I don't know what it is, but the one I have isn't doing it. It could be budgeting, forecasting to see the future, a business model. Those are the types of things people think is a fractional CFO. They can do those things. To me, that's a controller that does that, but nobody knows what a controller is in a corporation. But that's usually that range. So for service-based businesses, it might be 20 people where like I need something, I need to level it up. We need formal structure in place. I don't want to pay bills as they come in anymore. Um, I don't have a bill payment process. The business owner's going into the bank and doing something instead of like, get your invoice in by Tuesday. Our accounting team will process it. I'll approve it. So getting that structure in place is really what that leveling up is to me. A proper month-end close process where you're doing reconciliations and all those behind-the-scene things that most business owners don't know we do, and what that means. But all of those things are important to kind of ensure the data is correct, it's timely. You're removing bottlenecks to get the financials out as fast as possible in an accurate way. And then now you have the data to use to make decisions. So a long answer to that, but yeah, typically the number I'm seeing where they've come to that realization is 2-3 million. They should probably start doing it, in maybe that 1 million range. So it's not like we're trying to put the fire out as it's happening, but like we're investing in that future. But that's always the case.
You touched on a number of different things there, bottlenecks and processes.
Yeah,
All I heard in there was abstracting that founder from the rest
exactly.
of the process.
Yeah,
That's such a huge step in any business, making sure that that leader really has the opportunity to focus on what they're supposed to be doing, which is growing the business, not paying bills. So
yeah,
how
and the
do
vision.
you coach that, for the founders that you work with?
Yeah, and with you for a fractional COO, it's similar with the accounting side. Um, it that is true. Like even when we started our own company, we read what is it, the E-Myth, I think. So it was work on it and not in it.
Right?
So a lot of our peers work in it and they're still in it, just doing the books. Like I don't do that, and we made that investment early so we could scale because we're about providing an accounting department for businesses to scale. We kind of need to have a scalable organization as well. So we focus on that, and yeah, that is the challenge for the owners. A good idea is to understand for that owner, like, well, what do you plan to do with the business? Like some of them, it might just be what they want to do. I want to keep doing this. It's a lifestyle. I don't need to grow it and exit, and that's not in their radar. Then okay, that can be fine. But most don't say that. They want to scale it. They want to grow it. They may not be thinking about exit, but if you ask them about exit, then they'll have an idea of that. And then just try to work back from that. Okay, well, what would need to happen to get you to whatever that exit is? And as you know very well, the owner operating the thing is not the way to get there. It's really, as soon as you can, investing in surrounding yourself with a team of experts that can then carry the business forward. And now you're no longer required to be in it as much. Doesn't sound good, but ultimately that's what makes that business valuable to an acquirer. Is I'm not buying the owner, I'm buying the business that can operate on its own.
It's funny having that conversation, right? Because you don't want the founder in the business, but they still need to be involved.
Yes.
So it's a fine line between you're running the business
Yeah.
and actually being in it, because we want them out. We want them out so that their people can be the multipliers that they're there to be.
Yeah.
And you have to break from that cycle of I have to be involved in every conversation, every decision. I had a conversation yesterday around, I think it was like $40 million business that the founder still had to approve everything, and it's like,
Yeah.
no, that just doesn't work.
Yeah. And that's part of that is they just don't trust the systems. They don't trust the team, you might say, but it's really the process and the system, not the team, that they don't have confidence in. They don't have an understanding of cash. So they've got to approve every payment, so they keep it in their brain.
Right.
They don't have tools and ways to review the data to know it's happening. It is that kind of no structure, so they got to keep it in their brain, and that's very stressful, and they're going to fail long term at that. So it is kind of getting them realizing I need to put the processes in place and systems so that I can trust what I'm seeing, and then I can remove myself. And not every business owner wants to do this, but ultimately they need to just become the leader of the organization. They're the team leader now. They're not the operator. So what is the owner? Where are we going with the business? Why are we doing what we're doing? That some people can naturally transform into that role, and others, they're still in operator mode, and they may not want to do that, and that can be a challenge. They might need to hire a CEO to do that, so they can still do something else. But
It's a hard shift for a lot of founders.
yeah, because most people start their business because they know how to do that thing very well.
Exactly.
And they're not like, I want to start this business so I could lead a team of 150 people. Like, that's not normally why you start. And ultimately, as we know, that's what a business owner's journey is. You start out doing this cool thing for cool customers, and then now you're just managing people. And like, that's not what most people signed up for.
Right.
Yeah.
You mentioned margin earlier. Margin took me to profit.
Yeah.
Tell me a little bit about your profit approach.
The profit approach, yeah, those 6 pillars, we developed that a couple of years ago, and it really sort of formalized kind of how we go about what we've always been doing in a way, but we hadn't really formalized it. It came up through an exercise, or after an exercise, of the VTO out of the EOS methodology, where there's a 3 uniques, and we had answers, and it's like, those they don't really pass the test. Like, we just came up with stuff that didn't work. So then I'm like, well, let's go back and think about what we do and how we do it, and what's important to deliver what we're trying to deliver, and help those customers get from that 1 to 20 million. So the profit approach, the P is performance, R is relationships, the O is optimization, F is fractional, I is integrated, and T is timely. You mentioned earlier, like, what's a differentiator? That many of those are, and I can elaborate into a lot of those, we don't have time for. But performance is that more tactical, what do we do next with it? And that's the part, I think, that a lot of accountants are missing. When you go to school, I've been in school for a while, but I'm not seeing things have changed. Maybe it has. You just report on the accounting, and it's accurate and historical. There was no class I went to get a degree in accounting that was, what do you do with the numbers, and how do you plan out, and what tactic should I take? I use tactic, but it's really just collect cash faster,
Right.
by invoicing faster. That's a tactic. So just things that we might already be doing, but packaged up into the profit approach. And in the profit approach, we have different playbooks. And in the playbooks, we have tactics. So just we talk about structure, like, here's our pillars. Everything we do needs to tie into these pillars. Timely, the relationships, finding strategic partners that are useful for our customers, which has nothing to do with accounting, but we're a resource for them. So how can we help? So it goes beyond just, here's your books, see you later, see you next month, but actively working with business owners and other team members, because not every tactic is something accounting can solve. If there's a discounting issue, that's sales. We can show you that what discounting is doing to your bottom line. Sales has to go solve that problem if they choose to, if that's something they need to choose. So it is very collaborative, and I think that's one of our differentiators, but also ultimately part of that bigger profit approach. Yeah.
You're listening to the From Stuck to Scale podcast, and we're talking with Rhett Molitor about using accounting as a performance tool. And Rhett, you just said something key there, that you're identifying a problem in sales. In my own business, I've often said, CPAs, CFOs, you all are my best referral partners, because you come in typically first, right? Because something's wrong with books, right?
Right.
And you just identified, this is not a, finance problem. This is a sales problem. So what are those things that you see that point to different areas of the business?
Yeah, I'd say, so that's one, obviously, sales side. What their pricing is. Again, you figure in most business or any business, unless you're a startup where you don't care about revenue yet, pricing is the most important number, and it's usually a gut feeling based on what competitors are selling for type thing. So it's more of an art form in a way, but there is science to it. So that's one. We refer out to a pricing expert that will go and survey and do the analysis that I can't get into the details. So that's a common one that should come up, like, well, how do you price? Well, I don't know. Well, you should probably, I would start there, right? You should have a good answer of why you're pricing the way it is, et cetera. Mentioned just discounting before, right? So I'm going to close the deal, let me discount it. That has like a magnifying effect on your net profit that most people don't think of, on how that does it. So that's sales, maybe marketing that would get involved. We're talking normally to the business owner, but it translate there. Another one would be operations. So for a service-based business, we just became a partner, implementation partner for Workflow Max. And that's a time and billing tool where people enter time, costs, job profit. Most service-based businesses don't know what each job they do, what their profitability is. And so that typically will involve operations. So, okay, your invoices are taking too long to get out, or there's a review process. What can you guys be doing to get the data in the system fast enough so the invoices can get out to the customer and we get paid faster? So, or e-commerce, right? A lot of it is warehouse and them doing their job to get the correct data into the inventory management system so we have the correct unit cost. Otherwise, cost of goods sold is incorrect, and we're trying to figure out why. So a lot of accounting involves the key departments that we can identify issues, and some of those things on the accounting side we can do, but a lot of them it's go do this. And we use a tool called Fathom. I think the website is fathomhq.com. Integrate it with the accounting system, and that has a cool like goal seek. So as an Excel expert, like the power of that and a what if type thing, that's also a good way to visualize the drivers of the number you're trying to solve for, and have the business owner say, oh, okay, if I'm trying to get a gross margin of 80% and I'm at 50, like what percentage of sales needs to change, or cost of goods sold, or whatever, in the driver. And you could be solving for net income or another number as well. And I can't like increase sales by 25%, but maybe 15%. And maybe my costs, maybe I can cut 3%, whatever that is. Then you can see, boom, this is the impact that has. And they can come up with a tweak rather than like, just, I know my sales are low, I got to do this miraculous thing. It's like, no, you can just chip away these little numbers. Just do that in this quarter. I'm not going to solve the whole thing right now. So what little things can do you think you can do that are more achievable? And that's a good tool too. So yeah, a lot of touch points within organizations to ultimately solve the finance issues.
So for that founder that senses something is wrong, right? You just touched on a number of different areas.
Mhm.
Something's broken. I don't know what it is. Where, other than calling you, where would you suggest that they get started to look for what that issue is?
Well, if it's not us, it would be somebody like us, I guess. But yeah, it's really, most of the time it's going to revolve around cash, and it's not enough of it, or it's lagging or something. So that's usually the driver, that's going to get them to look for. Normally, when that happens, they're going to think they need a fractional CFO, and again, because everybody thinks they need a fractional CFO, a lot of accountants use that role name to do the thing they know the customer wants, which isn't necessarily a CFO thing.
Right.
I mean, not that it isn't, but again, you don't need that. So a normal CFO, if you're going to hire a full-time CFO, it's $250,000, $300,000 person. You're not going to bring that person in to solve a cash flow problem on a $1 million business and pay them $20,000 or something like that to solve it, or whatever that might be. So normally it would be, again, just getting a handle around your cash. So we have on our blog, a 13-week cash template. The thing I kind of mentioned, week by week, what's going in, what's going out, that can help. It's not rocket science. Like if a business owner sees it, it's like, okay, I get what this thing's doing. It's not a complex spreadsheet. It's flat file, just column, this total is your new beginning balance next week, and it just does that thing. I would start there. But if you hate doing that stuff, then you should just bring somebody in to help you do it, and not just try to avoid it, because it's not going to go away.
I'm sure you see all kinds of creative accounting in new accounts, at least. What would you suggest to our listeners, to stop doing today and to start doing?
Well, if it's a smaller, like, bootstrap business, sometimes, and I get why this happens. Sometimes for the business owner, personal and business, it's the same thing in their brain. They don't really separate it too much. And even from a tax perspective, with the pass through, like, it literally is just one thing. It's not two separate things in a way. So it would be keeping that separation. Don't commingle personal expenses in with business, especially if you plan to grow. If it's just going to be you forever, I don't know, you're an Uber driver or something, like, okay, that might work. But once you start hiring people doing those things, then you really don't know how your business is truly performing, because you've got stuff in there that shouldn't be in there. We've had businesses had a couple Porsches on the books, and they were not in. It wasn't a Porsche racing business. Let's just put it that way. We've had somebody think that we could put a boat on the books, and they were not an aquatic-based organization. And those things would have a big impact on the financials and the metrics that you might be tracking and your cash flow, where I don't, is my business on its own working or not? I don't know. You got to, there's junk in there. So we would discourage that highly, and in some cases have to maybe disengage if that was pushed too hard. But we don't see that too much. I think by the time they're bringing us in 2 to 3 million, normally they've made, I don't want to say outgrown those tendencies, but they're not going to expect a more formal company to do those types of things. But it comes up every once in a while. They're funny, but yeah, also kind of sad.
Yeah, I tried to buy a print shop many moons ago,
Yeah.
and when we got to looking at numbers, there was no way to get to a real
Mhm.
quality of earnings,
Yeah.
because there was just so much junk in there. It was impossible to rip it apart,
Yeah.
and inevitably the deal fell through. But
Yeah.
we went back and forth, and it was just impossible.
Yeah. That brings up a good point too. This just came up recently with a potential customer, where it is almost better for a business owner to try to keep their books cash basis and simple, and not try to do accrual accounting in a more complex way. Because if they do that year over year, it's hard to unwind that. You have to either go back to a prior year to fix it and amend a tax return, or you need to pass a big correction through in the current year, which might generate, at least accrual income, or something like that. So we've had some. There's a app that we like that has some cool accrual features. Accountants would be like, "This is amazing," the accounting system. But it was the COO trying to do the accrual stuff in the system, did it wrong, so the numbers were going the wrong way. And so we would have had, go in and correct that stuff. And so, yeah, if you've got a business like you're trying to acquire and it's got a bunch of junk in it, it's so difficult to unwind it. That's why there's forensic accountants, right, trying to piece together what really happened in a giant mess. So as you're building your business, again, proper qualified accounting keeps it clean. Later in an M&A transaction, that due diligence. We've had multiple customers, a few last year, go through due diligence, and they're looking at the reconciliations and things I mentioned earlier that non-business or non-accountants don't even know accountants do those things. But when somebody's looking at the books, and again, we're ex-auditors, so that's what we would ask for. It helps those exits go so much smoother and gives confidence to the acquirer. Like, okay, I can trust this data. I'm opening up. I'm becoming more trustworthy. But when you can't rely on the data, same with the IRS, I'm sure too, right? I'm finding this issue here. There must be more, and I'm going to keep looking. So don't give people reasons to do that. From an exit perspective, but even just, why would you not want to understand how your business is truly performing, even without thinking of an acquirer? But some people, again, they're motivated by different things, and it's just not on the radar, and that's okay. But know that they're going to have those challenges at some point when somebody else starts looking.
Yeah, I think societally, we have matured,
Mhm.
and I don't know how many thousands or hundreds of thousands of businesses start a week or a month. But I think especially with where we are from a business exit perspective,
Mhm.
everyone should go into their business assuming, hoping that someday they will sell.
Yeah.
So if they've got even an inkling that that is a possibility, they need to take the time to do things the right way.
Right.
Um, so I actually started an offering to help small businesses get off the ground the right way.
Nice.
So it's a three-tiered approach because I've done it. I've always had side businesses, and it's kind of like, oh, just throw together an incorporation and make it
Right.
an S. And when you get down to brass tacks, it's like this is a mess.
Yeah.
So I've got a passion project that I'm working on, which is an app to help care for seniors aging in place, and that's one I started it specifically thinking I'm selling it in 5 to 7 years.
Yeah.
So it's a Delaware corporation, it's a C, and all of these things
Yeah.
that I never would have even thought about, went into establishing, that incorporation.
Right.
Uh, so it does take a specific mindset, because a lot of people starting business today do in fact think I'm going to sell this for millions of dollars. So you got to start right.
Yeah. Yeah. Well, and we had one agency that was going through M&A, and they had a concentration risk that too much of their revenue was with one client. So it looked, profitable and good revenue, but there's that risk. And so, yeah, even if you have a multi-million dollar business and you think there's certain things that somebody's going to look for, it's like that's not as appealing as I'd like it to be. So you want to know that in advance and try to solve, mitigate those things before that. And I think going back, like, if you're starting a business, even when we started at Basis 365 accounting, we were talking about the company name or whatever, and it was just like, it's not. Let's just get off the ground and have some customers first. Like we don't need to overthink some of those basic things. So I get not thinking right in the beginning like exit focus, but I do think it's smart to think of it that way. Even though exit seems so far away, it's like impossible to even think about. It'll help you work on the business and not in it because you're already going to be thinking of, I'm trying to build this valuable thing. I don't have to exit, but I'd much rather have a scalable, functioning business where I'm not dependent on the bottleneck and I'm getting stressed. That because I focused on it being something that's more marketable. So in a way, it's like don't worry too much about the exit, but make it something that's somebody would want to come to you and buy it and choose not to. But at least it'll help you build a healthier business, I think, from the start.
Yeah, absolutely.
Okay.
So Rhett, you can't have any conversation these days without having AI be part of that. How are you seeing AI impact your business?
Yeah, it's interesting. I think a lot of industries, it's like AI is coming after us and replacing us. What one thing we have seen is there's been a few accounting startups that had AI in the name. Actually, some of them were found to actually not be AI. They were just offshore workers, maybe named AI. I don't know how they did that, but they've gone out of business. And I have a blog on why I think that that's the case. And to some extent, like accounting can be automated and AIs definitely have an impact there. And I'll talk about, but there's still that human nature. I don't think any business owner just wants to be the only employee of their own company and have a bunch of AI agents do everything and be alone. That's not going to be very fun. And so back on the profit approach and relationships, like a lot of the times we're having conversations with their customers, it's not about accounting. It's about what just keeps them up. It's adjacent to it, but it's more than just here's your numbers. Oh, those are amazing. Thank you. But like, well, I got, pipeline and my sales team, and it's a little more, emotional than that. And AI can, well, maybe it can. I guess you can ask that and have a relationship with AI. But if you just use AI for data, then yeah, that human touch and somebody to talk to, I think, helps as well. But in terms of AI in our business, we use Gemini internally. I also use Claude. I've tried ChatGPT as well. They're moving along so fast. They do help a lot with the team. There hasn't been a silver bullet yet. I mentioned a system earlier that was AI based. That one's called Puzzle AI. It's AI native. Intuit, put AI agents in Zero, which is one of our favorite accounting apps. Has AI. So they're all doing it like every other application. It's useful. A lot of what we see is kind of superficial AI. Like, okay, that's great, but if you don't have your proper accrual accounting, you can't ask AI a thing that would need accrual accounting. It's just going to look at what the data is, and if the data is wrong, it's going to give you a bad answer. So, like, it's more chat based, but with Claude just launching those financial skills or whatever they were called yesterday, it's going to be more robust. How to automate the month end close and other things like the flux, that we call it a flux, where we do sort of variance analysis to look for anomalies, duplicate entries, like definitely gonna help on those types of things. And then even the tactics, I'm sure, we will, we use it a little bit, but it will become even quicker to do that. So some of it's going to be great, but I think like with anything, it's like you can automate, I don't know, something like dentistry, but I still don't know how to do dentistry. So even if you have this great, powerful accounting tool and you're the business owner, it's like you don't necessarily know what to ask. It's similar. Like if a business owner is going to hire an accountant, what do I look for in an accountant? I don't know accounting, so I don't even know what questions to ask to choose the correct one. So I think some of it's still going to be operator. Like you have a great tool, but it's only as useful as that operator. And similarly, if it's giving you bad information and you don't know it's bad. I've seen a lot of people try to use Claude to generate a business model. It's pretty impressive, but it'll make mistakes. And
Right.
we can see those things. But, if I'm not really looking and I'm not a business owner who knows that stuff, I might have formulas doing the wrong, and it's giving me bad information. So I'm excited about it. There's a little concern with every knowledge type industry, but it's amazing from my perspective. I think it's still a net positive.
So, Rhett, you've given us a lot of great information today. What other tips or suggestions do you have for our listeners?
Yeah, I think I would start, again, our differentiator you mentioned earlier on was what's unique about us. And it's really trying to look at accounting not as a cost center, backward looking thing that's not useful, but something that can help you figure out where you go and what should you be fixing next. Constantly improving, excuse me, your financial performance. Things might be great. It's not broken. That doesn't mean you can't still improve something. If something's broken, fix it. If it's working, make something better. And I think that's important. So we call those types of things tactics. So I would recommend maybe signing up for our tactical accounting newsletter. You can find the link on our website, basis365.com, BASIS 365. Another thing we have is a financial operations assessment. So it's free. You don't have to give us your email or anything if you don't want to. And that will ask you, I think it's 25 questions, 5 questions per section. They go pretty quick. I don't think you have to think too much about it. And it'll score you and give you some recommendations on what it might look like to improve that thing that maybe you didn't score so well on. So that one's also on the website, Financial Operations Assessment. Start with there. The Tactical Accounting Newsletter, it's just, I think, usually 4 to 5 tactics every month. Pick one that's relevant. If not, reach out to us. We've got a whole bunch more. But it's just kind of whatever we posted on social that month. It just kind of summarizes that. We also highlight a strategic partner in that newsletter every month. We have one, but just to get the brain thinking, they're short. It's not like I cannot read a long newsletter. So it is really like 5 minutes. You scan it, eyeball, that's interesting, 2 sentences. And then, okay, if you want to take action, take action. So I've had to unsubscribe for a lot where I'm just scrolling. Like I don't have time to figure out what I need to read here. So it's a super quick read. And just to get the brain thinking, yeah, tactically, maybe I should. If not these, what else can we do? And I think that if you get anything from the podcast, it would be that, like, just how can we be tactical with our accounting and what's the next thing we should work on? just one. You don't need 10 things to work on.
I'm going to have all your contact information in the show notes, but what's the best place that our listeners can reach out to you?
The website, I see what comes through the website. But yeah, my email, you'll have there, rhett@basis365.com. I'm more of an email person than a unknown number, phone number person. But yeah, just reach out, check out the website, or LinkedIn as well. There's actually another Rhett Molitor in the world, oddly enough, but hopefully you can recognize my face on LinkedIn.
With a name like Julio Gonzalez, no one will ever find me.
Yeah, true. Yeah.
All right. So that wraps up another great episode of the From Stuck to Scale podcast. Thank you so much, Rhett, for sharing your experience and helping redefine the role of accounting in business. Remember that accounting isn't just about tracking the past, it's about shaping the future. Let's transform your accounting from a cost center to a powerful performance tool. It's time to get more from your accounting. So until next time, keep growing and stay focused. See you all soon.
You've been listening to From Stuck to Scaled, growth strategies for small and mid-sized businesses, produced by Optocution LLC. For more information, tools, and resources, check out our website www.redefinepossible.co/podcast.